Today is Thursday, April 25th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. We will discuss the latest on the markets with our crypto experts, Jason Fernandez and Kevin Mirko, shortly. But first, let's take a quick look at the market indicators as the total market capitalization has stabilized below the $180 billion mark. The cryptocurrency index, CCI 30, has remained south of the 3,000 point level after the most recent decline. The index is still 13% in the green month to date. Its gain measures 36% so far this year. Despite the recent market turbulence, the 30-day Bitcoin volatility index has remained remarkably calm at 3.5%. This is where it has stood during most of this month. The CoinMarketCap website's 24-hour traded volume indicator has remained close to the $50 billion mark, indicating active trading. The Messari website's real 10 volume has edged further up as it is moving towards the $1.8 billion level. The Bitcoin dominance indicator shows no significant movement over the past 24 hours. It holds the ground above the 54% mark. The top 5 digital assets are stabilizing as yesterday's drop fades out. Litecoin has reclaimed the 5th position. Bitcoin sees support above the $5,400 level after losing approximately $200 in value. Ether has settled above the $160 price range. Traders of XRP coin are battling around the key 30-cent psychological level. Bitcoin Cash remains more than $20 south of the $300 mark. And lastly, Litecoin trades just slightly above the $70 level. The Coin 360 heat map shows a generally mixed picture as the market settled down after yesterday's sell-off. According to the Token Spread website, the CEX and Kraken exchanges post the biggest intermarket spread of just over 1%. The peak single market buy and sell side difference is 0.12%. It was recorded on the XMO exchange. We will now take a quick look at Decentraland and its Mana token. It is a virtual reality platform that is controlled by its community. This world is built around the Mana token, which is used to trade goods and purchase services. Virtual land can be bought and sold on a decentralized marketplace. Interestingly, people have paid up to approximately $175,000 for a parcel of land. The Mana token reached its all-time high of nearly 30 cents in January of 2018. As of today, it can be purchased for just over 5 cents. We will now review the performance of various cryptocurrency asset classes as categorized by the Messari website. The infrastructure group posts an overall decline of slightly less than 1%. These assets show a generally mixed picture. The media and entertainment category is the most bearish group with a drop of more than 3%. There's plenty of red here, and the LBRY credits coin is down by more than 20%. The financial sector is the only class that is trading in the green. Binance Coin and Argo's REP are the bullish drivers with gains of close to 5%. The currency category is close to 1% in the red, despite a number of coins trading in the green. And lastly, the services section is virtually unchanged on a generally mixed performance. This is where the 5 major cryptocurrency categories stand so far this Thursday. We will now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the biggest decliners. We'll start with the gainers. Most of the digital assets are trading in the red today. The KuCoin shares token stands close to 8% in the green. This digital asset posted a similar increase on Tuesday, but it was followed by a pullback. Bitcoin Diamond follows with a gain of close to 7%. This puts the asset back above the $1 level. The Engine coin posts a 24-hour increase of almost 6%. This comes as a rebound after a downtrend wiped out approximately 25% of this altcoin's value since Saturday. The Argo's rep token is up by 5% to trade close to the $22 range. This virtual coin has seen a bumpy ride after being listed on the Coinbase exchange last week. The altcoin token wraps up this list with a gain of 5%. This rebound follows a downtrend that has lasted for more than a week now. We'll move on to the decliners. Declines are more significant as the bearish sentiment drives the market down. The slide continues for the Maxi coin. The asset has dropped by close to 12% over the past 24 hours. It is down by approximately 30% since last Thursday. The Digix DAO token has been on a move lower since facing resistance around the $40 mark on Monday. The asset trades at less than $30 on a daily decline of nearly 10%. The Tezos coin trades 8% in the red. The asset has given up more than 25 cents after rising to the $1.50 level earlier this week. The BitShares coin shows a daily decline of close to 8% to trade near the 5.5 cent mark. The Insight Chain token wraps up this list, and the digital asset stands 6% in the red. These were the top 24-hour moves during the European morning trading session this Thursday. We will be joined by our expert guests, but don't go anywhere. After the short break, we will be joined by them.
There are 180 different countries all around the world, which makes us growing like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
Welcome back to Blocks Live TV's Crypto Now show. We will now join our crypto experts, Kevin Mirko, CEO of Coin Metro Exchange, and Jason Fernandez, COO and co-founder of AE Token. Hi, great to have you guys. How are you doing?
Excellent, Leah. How are you?
I'm good, thank you. Now, Bitcoin has pulled back after printing a fresh high for the year above the $5,600 price level. Is this dip an opportunity to increase positions? Kevin, we'll start with you. What are your thoughts, please?
Sure. So we've talked about this over the past, sorry for my voice, by the way, fighting a cold, but we talked about this over the past 2 weeks or so, in that once we broke through that psychological level of 5,000 US dollars, that we started to see higher highs. So we saw 5,200, 5,300, 5,500. And now recently we saw us hit that $5,600 level and bounce back. You have to understand, though, that psychological levels aren't only paired to the USD. If you look at euro, for example, 5,000 euro is roughly 5,600 US dollars. So at the same time you fight psychological levels paired to the US dollar, obviously US dollar volume is higher than the volume that gets traded, let's say, direct through euro or euro stablecoin, et cetera. But that volume is growing. So we basically hit another psychological level. Well, we hit 5,000 again, just paired against the euro. I would say that right now, I still don't see any true, let's say, reversal signs that we're actually in a bullish market yet. I think we could still be considered to be in a bearish correction if you look from some technical standpoints. But I would say that us remaining above 5,000 US dollars is definitely a good sign. The fact we're making higher highs is a good sign. If I was going to be accumulating more at this level, I would simply be making sure that I have some tight stops. Don't over leverage yourself. Your lower stop should probably be somewhere around 49 to 4,800, and then you move your stop as the market moves forward. But we've definitely seen positive signs over the past few weeks. That's for sure.
Kevin, thank you for your thoughts there. Now, Jason, we'll go straight to you. What are your thoughts here, please?
So yeah, I think this is a buy opportunity. I think we commonly see this happen, like a slight pullback. when traders take profits off the table. So last week when I was on the show with Kevin, I said I thought it would fluctuate between 5,200 and 5,300, and then break out into 5,500, and that's pretty much exactly what it's done. I think it crossed it at 5,600 territory briefly, and then there was some profit taking that took it back down to just under 5,500, which is where it is right now.
And Longhash website article reports that Bitcoin transactions are approaching the previous bull run high. The daily confirmed transaction count has ventured above the $400,000 mark on a number of occasions this month. So how does this correlate with the price of the asset?
Right. So generally, though not always, a rise in the number of confirmed transactions has been known to result in a price increase. But if you delve into the numbers some more, the high network activity since Bitcoin was, we haven't seen this sort of high network activity since Bitcoin was at 10,000. And at the same time, we're seeing transaction fees are 5 times lower than it was even at the beginning of 2018. And that indicates that some of the scaling strategies that we've used, perhaps SegWit, could be helping with the scaling problem. Also, you mentioned transactions, but also we have to look at Bitcoin outputs. A lot of crypto exchanges are using batching to group multiple outputs into one batch or transaction to basically lower transaction fees. And so a confirmed transaction may actually contain several outputs. And even if you look at the outputs are also up. So we're averaging something like 1,067,000 outputs per day, and that's the highest in Bitcoin history. And that basically averages out to something like 3 outputs per confirmed transaction. And that's actually, again, something like 30% higher than it was even when Bitcoin was at $20,000, which is at the its highest amount. Also, hash rates are also up. That's another key indicator. They're up 5 times what they were earlier. And there's also a lot of off-chain activity, so the Lightning Network, which we haven't really accounted for. So I think what that means is Bitcoin today is much stronger fundamentally than even when Bitcoin was peaking at 20,000. And I think what that indicates also is that the crash was just a case of the valuation running away a bit from network fundamentals, but then sort of pulling back when everything was corrected.
Thank you for your thoughts there. Now, Kevin, let's hear from you, please.
Sure. So I agree that price doesn't equal stability, right? So Jason mentioned that just now, and it's kind of a fundamental thing that usually takes traders years to figure out. But price never equals stability for an asset. So when Bitcoin was at 20,000, obviously we're in a much more immature market. The market still needs to mature a bit, that's for sure. But what we're seeing now is lots of infrastructure development. You're seeing more and more companies start to accept Bitcoin. You're seeing off-chain like Lightning and other things that are starting to take more of a position. Not only that, but you're also in the fact that Bitcoin, we saw, obviously we hit our low lows of around $3,000 or so. And as the asset starts to actually increase back in value, people are actually looking at it more again as a transfer of value, or looking at it again, they're spending their Bitcoin basically, and they're moving their Bitcoin around, where when we were in that bear market, that crypto winter, basically most people just wanted to sit on the asset. They wanted to wait it out. So transaction volumes died. And as we were moving up towards 20,000, the vast majority of those transactions were people buying Bitcoin, period. There wasn't a lot of selling going on, obviously. And now we kind of have a market that's, as you can see, when we battle through price points like 5,000, for example, or even now through 5,600, which is 5,000 euro, you see that there's almost equal action on both sides. So there's lots of buying and selling, which means there's people transacting. They're buying Bitcoin for the first time, which is obviously a transaction. They're withdrawing that to their wallet. They're bringing it to other exchanges to maybe sell it. So that we're starting to see much more of a fluidity between participants that we didn't see on that initial bull run, because that initial bull run was fueled by retail buying, and that's pretty much it.
Thank you for your thoughts there. Now, we have seen some movement for the French hardware wallet producer Ledger. First of all, they announced promoting the company's president to the CEO position. What does this move mean for the company, Jason?
So I think basically this signals the company's move into sort of focusing on institutional investors. So they recently announced the Ledger Vault, which is a custodial solution designed for with institutional investors in mind, and that's sort of the bigger brother of the Ledger Nano X, which a lot of regular users have their cryptocurrency stored on. So I think what this indicates is they're sort of they've decided to refocus, and I think this is in response to the recent investment from Samsung. So we've seen that perhaps Samsung was of the mind that institutional investors were much more important, and so thus they've sort of had this management shakeup. Whereas the previous CEO will now be focusing on vision and overseeing regulatory and government outreach. So he sort of changed focus, and I think this is sort of an indication of a refocusing of the company.
And Kevin, can you give us your thoughts? What do you think this move means for the company?
Yeah, normally when you see any type of movement in the upper echelon of a company, it's either for one or two reasons. And that's one, just that the company's not doing well, which I would say is not Ledger's issue right now, or that they're probably gearing up towards either some big fundraise or they're gearing up to make a change in how they approach their business. So as Jason mentioned, I think that I actually had a conversation with Ledger some time ago. I gave them a great idea about what they should do on the custody side to basically take away the advantages of decentralized exchanges from centralized exchanges. And at the time, they told me they weren't interested, but it seems that they seem to be interested now. So I think that they're probably refocusing. I think they've saturated the retail market a bit, that's for sure, and now they're looking for bigger fish. So yeah, and as Jason mentioned, the Samsung investment, I would assume that investment is probably part of a larger trench. And maybe that's also why there's a bit of management shakeup, because they're looking for someone that can lead the vision into the next level, rather than the current CEO got them to where they are. Now they need somebody that can lead that vision into the future.
And you mentioned the Samsung investment there, because we have seen and we've heard news that Samsung has invested 2.6 million euros in this hardware wallet company, and that it may be considering the launch of a token. What could this investment actually signal, Jason?
So I've heard rumors that the Samsung coin is imminent. So some are saying that it could be a private blockchain right now, and then that's what they're thinking. But the same sources are also saying it could also be a public blockchain or a hybrid. And so the rumor essentially covers all possibilities. A public blockchain would mean, of course, that people are able to buy and sell Samsung coin on exchanges. But I think it's a little too early to go around making investment based on rumors until at least they've solidified into one coherent rumor in the first place. Okay,
and Kevin, your thoughts, please.
Yeah, I mean, hats off to them for releasing every possible scenario as a rumor. That's awesome. But what I would say is that I've said this probably for more than a year now, maybe even 2 years, I don't know. At some point, Google, Amazon, Facebook, Samsung, all these companies that have any type of app store or infrastructure, or it makes perfect sense for them to tokenize this at some point, especially in a more closed ecosystem. Samsung obviously has their own kind of closed ecosystem around their devices. They have their own apps, etc. So they obviously control a huge amount of the Android marketplace, which means they have a lot of people that would use these apps, use any type of, let's say, payment service that might be devised, or any type of way to move value from one handset to another, just like Apple. So eventually all these companies are tokenized to some level. It reduces costs. It allows them to do many things that they can't do right now. And almost all these companies, Samsung included, have some type of electronic money or payment institution licensing in different regions around the world. They usually do that to basically minimize their costs and allow them to break into different markets when it talks about payroll, when they have to do trade finance and things like that. But these licenses will allow them to do very, very, awesome things with tokenization. So it's going to happen. All these companies will do it. Samsung usually tries to take the initiative to be first when it comes to these type of things. They usually like to take a bit more risk than, say, your Apples of the world do. So I think one of these rumors is probably true. I would assume it would probably be private initially, because it reduces the risk, regulatory and otherwise. We'll have to see. But the fact that they invested in Ledger, I don't think that has any signal that they're actually coming out with their own token. What it shows me is that they're diversifying into different aspects of this industry that they think might actually take off. And if it does take off, they can obviously mimic it on their side. But I think the token is probably imminent, and it probably will be private.
Well, we'll have to wait and see there to see which rumours are true. Now, various experts, including crypto influencer Thomas Power, believe over 90% of all cryptocurrencies will eventually collapse. So do you agree? And are there any cryptocurrencies that will for sure prevail? Jason, what are your thoughts?
So I think overall, I definitely agree with at least the substance of that. There are about 1,300 cryptocurrencies. So even if 90% of that goes to zero, that still leaves the top 130. And the top 14 cryptos alone represent 92% of the value of the industry, the total value. So if you extend that to the top 130, or even the top 100 that CoinMarketCap tracks, essentially, I think you mop up most of the crypto market gains. So basically what I'm saying is we could lose 90% and it really wouldn't matter.
Okay, and Kevin, your thoughts, please.
Yeah, this ratio goes across all business, right? 90% of startups fail, 90% of small businesses fail. Well, 90% of the small businesses that created their own crypto asset will probably fail. So, yes, 100%. And as just as Jason said, you can look at any, even your more mature markets. Your Dow 30, for example, the Dow 30 is a huge portion of the overall Dow, even though there's many more assets that are traded on the Dow than just 30 assets. So in any market, having 90% of assets fail probably doesn't take so much out of the total market capitalization. So just as Jason mentioned, we'd still have a market cap pretty much to where it currently stands. And to be honest, that type of cleansing is going to have to happen, whether it's because of regulatory issues or whether it's because of other reasons, just because they can't gain traction. But that's what happens in mature markets. So, you know, not everybody can succeed, unfortunately. So this, I don't know in what context Thomas was kind of trying to do this. I know that in a lot of people try to put these in negative lights, like saying 80% of ICOs are scams, for example, and things like that. In reality, though, this ratio carries across all aspects of business. So it's absolutely not just indicative of the crypto market.
Okay, thank you for that explanation. Now, Kevin, we'll go straight to you. What can we take away from a recent poll in Europe that shows that less than half of respondents believe Bitcoin will still exist in 10 years?
I would say you could take away probably 2 or 3 things from that. Number one being, I don't think everybody that they ask probably understands what Bitcoin is. 2, you can also, if you asked that question even 2 years ago, it probably would have been heavily weighted on the fact that it won't exist. And now you're seeing 50-50, which, to be honest, is quite extraordinary because I don't think 50% of the population agree on almost anything, to be quite honest. So having them agree 50-50 across is kind of astonishing, to be honest. And in reality, I don't think anybody can actually predict whether the original Bitcoin will still exist in 10 years. The technology being that blockchain and the fact of tokenization and monetizing assets on a distributed ledger will definitely exist in 10 years. I think that question maybe would have gotten the same response, mainly because they probably asked just people on the street rather than, let's say, financial professionals. But I think it shows that people actually, at least they think they believe what Bitcoin is. They actually understood enough the question to answer it, which, again, even 2 years ago, I think if you said, will Bitcoin be here, a lot of people would have said, what's Bitcoin? So I think why this they might probably be trying to show in mainstream media that this is kind of something dark for the industry. I think it's the complete opposite. I think it's rather telling that more and more people are now knowing what Bitcoin is. They probably don't understand it fully yet, but the awareness and the adoption has definitely increased, 5, 10, 15-fold in a very short amount of time.
Okay, so very positive for the space. And Jason, your thoughts, please.
I mean, I think what it would indicate is that people are very poor predictors. So I think 10 years ago, it was 2009, 2008 when Satoshi first published the paper. So it didn't exist at all 10 years ago. And I think 8 years ago, people would hardly anybody had heard about it. I wrote an article 6, 7 years ago about how Bitcoin was the future of money, and everybody I know called me insane. At the time, Bitcoin was valued at $2 billion, and now it's valued at just under $100 billion. So I think that people have very poor context of how Bitcoin has grown. I mean, if you look at the last 6 years, if you ask people that 6 years ago, let's say, most of them would say it's failed. And today, and they would have been wrong. And today, equally as many people would probably say it would be failed, it would actually fail, and they're probably even wronger, because if you consider that over the last 6 years, that much growth has happened with Bitcoin. We've had that much adoption. It's so much more valuable now than ever was. So I think that they're essentially that people are poor predictors. Also, we can't say for sure, of course, whether Bitcoin will stay around, but I would guess that it would be. If I were to guess, I would say probably.
Okay, and just finally now, in case of negative interest rates actually being implemented, would you recommend cryptocurrency as a safe haven or gold or any other asset? Kevin?
Well, we already have negative interest rates in many countries around the world. I know we get really nice negative interest rates on our corporate accounts here in Europe. So would I recommend crypto assets as a safe haven? It really depends on your position and what you're trying to achieve. From a corporate standpoint, I would say no, not yet, because the market hasn't matured enough to a level to where the volatility is predictable enough in order to basically classify any crypto asset yet as a safe haven. I wouldn't even say gold is necessarily a safe haven. You know, my grandfather bought gold in the 80s for $850, which according to inflation as of today would be somewhere near $5,000 to $6,000. And I bought it in 2002 and 3 for $250 an ounce. You know, even gold, to be quite honest, over time when you add in inflation, isn't the best safe haven either. So normally it really depends on what you're doing, what your position is. There are currencies that can act as safe haven. The yen has traditionally been a safe haven because they've held down interest rates for the last 20 years. The Swiss franc used to be considered a safe haven. Gold, obviously, in certain circles is considered a safe haven. So you know, it depends on the amount of capital you have and really what your goal is. But I think when it comes to cryptocurrency, at least in my mind, we haven't yet proven. I think we will have at some point a crypto asset that is truly a safe haven, and it more than likely will derive its value from a basket of other currencies or assets, etc. But we don't yet really, in my mind, we don't have that yet.
Okay, and Jason, finally, your thoughts for us, please.
Yes, I think the term safe haven is probably a loaded term. I don't know if you could actually say that Bitcoin or cryptocurrency is going to be a safe haven in the near future. But I think overall, like I'm definitely bullish on crypto, and I think that there's a lot of new services that actually allow you to gain interest on crypto, like particularly some exchanges that are paying interest on crypto. So it's starting to look more and more like something that's like a safer investment for a lot of people.
Jason, Kevin, thank you so much. It's been an absolute pleasure, as always, having both of you on the line with us today. Thank you.
Thanks, Leo.
Now, before we sign off, I have a last-minute update from our editorial staff regarding the crypto market. The digital assets are shifting towards the positive side as yesterday's drop is fading away. The total market capitalization has been moving sideways below the $180 billion mark. Trading activity has continued slowing down. The CoinMarketCap website's 24-hour trading volume indicator has slipped further below the $50 billion level. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin Merko and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.